Broker Bulletin acknowledges the traditional custodians of all the lands across the country on which we record our podcast and pays its respect to all Aboriginal and Torres Strait Islander people. Welcome to the Broker Bulletin podcast, where better begins. Join us as we chat with brokers about what's working for them, what drives them, and the real challenges and wins that matter most right now.
Hi, everyone. Welcome back to another episode of the Broker Bulletin. I'm Kath Persoglia, and I'm so excited to be hosting today's episode where we are talking all things Skip by LMG. And today, joining me is Mario Emmanuel, the co-founder of Skip. Welcome to the show.
Thanks so much, Kath. It's great to be here.
I have to say, I love lenders that do things differently, and Skip by LMG is absolutely one of them. And we're so excited about the launch of Skip by LMG. And in today's episode, there is so much to unpack. We'll touch on the rebrand of Sucasa into what Skip is today. Then we're going to do some myth busting around 98% LVR lending. And then Mario, I would love our listeners to hear directly from you about the customers that you're helping, the real life impact Skip is having, and how brokers can use Skip in more scenarios to help more clients get into a property sooner or even start their investment portfolio.
Awesome.
So let's get started. First of all, the rebrand and the evolution of Sucasa to Skip and how that aligns with your purpose, your mission. What was the story around Skip?
Yeah, it's a great question, Kath. So I guess when we first started Skip, what is Skip today or Sucasa then, we as a founding team were really focused on, there was a massive problem in terms of access to housing for great young Australian borrowers who were struggling with the deposit, and we wanted to solve it. And candidly, branding was probably not at the front of our minds. And so we sat around and came up with a name, and Sucasa was it. And what became clear over the next, 3 years or so that we were on the journey was that, fundamentally we're an Australian business and we're helping a really core group of Australian consumers. And so Sucasa, which is, a play on Spanish, didn't really fit with what we were about, and so very naturally we sort of started revisiting that, and we moved to Skip, and Skip's, gets to the heart of what we do. It's fundamentally Australian, and so we think really aligns with what our business represents and stands for, and the values and the purpose that we exist for. There's sort of this added benefit, obviously, for brokers that they don't need to go explaining what Sucasa means to a customer, and we don't need to explain what Sucasa means to brokers. And Skip, we do what it says on the tin. We help young Australian workers skip to home ownership.
I love the branding, and I love the story behind it. You've identified a big gap, as you mentioned, and the opportunities to help customers who have strong serviceability. They've got solid income, but they've got that limited deposit. You've designed a product with a 98% LVR for both owner-occupiers, and you've extended that to investors. It's all to help them purchase a property, get into the market, and potentially buy that property at that higher purchase price by offering them a 98% LVR. So essentially, you're increasing their purchasing power. And where high LVR lending typically comes with a whole set of preconceived ideas on policy, pricing, and even thinking about, high LVR is only suited to one particular clientele. But today we're here and we are busting these myths, and we're deep diving into the nitty gritty, because brokers can't just pigeonhole certain customers for a 98% LVR. And today, the podcast is all about helping brokers understand the opportunities in front of them. So, Mario, let's get stuck into our myth busting. And it is myth number one, the serviceability. Typically, high LVRs mean higher interest rates, higher fees, lower DTI, higher monthly surplus requirements by the banks. And this ultimately is reducing the borrowing capacity of a customer. So how is Skip different?
Great question. And yeah, it's a common misconception. I think probably a well-founded one before Skip came into existence. So when we started the product again, we came, and everything we do is aligned with our mission, which is helping young, hardworking Australians skip into homes. And so the important thing for us was that for clients who have more servicing than their deposit allows, we needed to be the absolute best option. And just on that point, we think that the market and who are those clients is actually a really big tent. There are a lot of customers that the brokers out there will be meeting who have far more servicing than their deposit allows them in terms of to purchase on traditional options. And so there is a new alternative. But again, it's important for us that servicing actually goes up when you think about Skip rather than goes backwards, because I guess the myth or what the preconceived notion that brokers have is once you tick over 90 LVR, you start hitting penalty rates, LMI goes higher and higher. And so customers are taking 2 steps forward and 1 step back. And really, they're paying a lot of fee for not a lot of benefit. And that was a really well-founded concern that brokers had. And we come across that all the time. And I guess with Skip, what we've done is, we've kept our rate really low. So, today, and this will get stale as time goes on, but, our rate's sort of 6.39. The nearest sort of owner-occupied rate is about 30 basis points higher. And so that 30, 40 basis points that your clients save in interest rate means that when they go above 90 LVR, they can still service really, really strongly. And so it's not taking them backwards. Similarly, our fee is about 10 to 40% lower than LMI. Their fee isn't taking up all of the extra LVR that they're getting either. And so what we find is that customers with a Skip product, they actually can make make use of the additional servicing they have when they choose us. And it's a bit of an eye-opening experience both for customers and for brokers who think, wow, this is a new option that actually allows me to do completely different things. And what we've found is, even on a simple example, is that clients are increasing what they can buy by whether it's 5% up to 30%. And that's a massive difference if you think about clients and, the ones especially that are struggling with purchasing. They're sitting at home during the week, on the weekend, on realestate.com or on domain.com. And their ability to just move that max purchase price a little bit higher is probably turning them into a settlement rather than into an AIP that falls over. And so, yeah, we think it's a myth that we've totally done away with, and the game has changed, and it's really, really keen to get the word out there and just get brokers to try it out, have a look and see if those rules that they had still apply when Skip exists.
And on that, and you're talking about calculating serviceability and so forth, you've got tools on your broker site, that brokers can jump in, they can use, and they can play around, and they can see exactly the borrowing capacity or the purchasing power that a client has. And I know we're going to chat about some examples of customers that you've helped later on in the podcast, but it is so powerful just for brokers to jump in and play around with those tools. It is a visual demonstration that they can share with their customer as well to really help the customer understand this is traditional, but this is another option for you, and making sure that they present that option to their customer. Now, on to myth number 2, high LVR, high risk.
Yeah.
What do you say?
This is a really interesting one and sort of, has been pretty topical, right? Not to get into the weeds of the technicalities around mortgages, but ultimately borrowers are responsible for covering their loan, and whether they put their money in as equity or keep that to themselves in their savings account, in their offset account, in their investments, that cash balance and their equity protection provides them with the security that they need to understand their home. And so I guess, when we think about it from a customer's perspective, what we do is we lower the deposit. So when your customers, and probably back to this point of the customers that have more servicing in their deposit, they go to brokers and they say, this is my family, this is my income, this is my savings, what can I buy? Skip helps them get more with less. Or similarly with if they wanted to buy the same houses with a 95 LVR LMI loan, for example, Skip would allow them to do that with putting $30,000, $40,000 less in, a materially lower deposit. And we think of that as, fundamentally, that's a safety net for that customer. the more cash that you have, the more buffer that you're able to retain for yourself after you purchase your house. That's money for a rainy day. That's, the ability to deal with whatever volatility life offers you. And so we probably think of it the other way, which is, clients who are running themselves down to absolute zero to get an 80% LVR loan or a 95 LVR loan, they're going to hugely benefit by having that cash buffer retained and then using that and having that, knowing that, or having that peace of mind, I should say, that's going to cover them through whatever bumps come in life's way. Because at the end of the day, if you can service the loan, then no one's really bothered about where their equity is. And our clients are 95% of them are owner occupied. We do support a number of investors, but they're making a decision about where their family is going to live for the next 5-10 years. They're not worried about the volatility of house prices over the next 6 months. And so, people are making a fundamentally different decision with us, and retaining that cash buffer helps them out. And so, yeah, we think that that's, it's worth having the conversation with your client, right? About, would you prefer to have cash in your bank account, or do you want to put it into the deposit so that, it's like buffer that you can't actually access? And we think that a lot of sensible people out there would choose to have that money available to them to manage those things. And so, yeah.
Yeah. And I think it goes back to giving the customer the option.
Absolutely.
And making sure that you research those options. And again, looking at it as an overall holistic picture, because yes, typically the more you put in, the better the interest rate or the lower the LMI. But in this scenario, it could be removing all of their cash out of their account. They've got no safety net. They've got no plan B if things come up along the way. And that's just not real life.
Yes.
So knowing about this option and letting your client make that decision. Myth number 3, it's too complicated to write a loan at 98% with Skip by LMG. Now, there's lots of lenders in the market that do high LVR lending, and brokers can get confused on the structure and the setup of the loan. And it can also be really confusing for them to explain that to their customer. Is it one loan? Is it 2 loans? Is one of the loans amortizing down quicker? Is it a second mortgage? Tell us the process with Skip by LMG.
This is absolutely a myth. Maybe if I bring it back to everything we do at Skip is founded in our mission, which is to get young, hardworking Australians into their homes. And to do that, things need to be simple. It needs to be simple enough for the customer to understand, simple enough for the broker to understand so they can explain it to customers. We're very aware that there are options in the market that brokers might have dealt with, that they might have had frustrations with, where you've got different rates, different loan tenors, different lenders even. And so it's critical, and a key part of what we do is we do away with all of that. It's a single lender, a single decision, a single interest rate, and a single tenor. When you apply with Skip by LMG, you're applying with us. If we say yes, it's a loan and it's approved, and you have the certainty to go ahead and give that to your client, and your client can go ahead and purchase. And so we do away with all of that complexity. And the other part I'd say is that with the benefit of that single rate and that single tenor is that we're directly comparable to a loan from a major lender, right? So if your client wants to go and say, okay, well, I've got this loan from Skip by LMG, this is my interest rate. They plug that into a major lender's calculator, they're going to get roughly the same repayment, right? It might be off by a few dollars here and there. And so they have that certainty and confidence. They're not confused about, what is the actual interest rate? What is my actual loan tenor, or any of those sorts of things. And so brokers can present the option to clients with certainty that they're going to be backed up by the client's own research. Tying into that, again, we're in the business of making brokers look good. And part of that is being fast and efficient and giving brokers certainty so they can give clients certainty. And so again, having a single decision maker means that we can be extremely fast. So our pre-approvals are fully assessed, which is critical in our space because we offer an option that others can't match and certainly can't beat. And so because of that, your clients want to be able to go out and purchase with certainty. And so we offer fully assessed AIPs. Those are done within a business day. We've actually had a broker who emailed in after getting an AIP done within a couple of hours, and they asked if we were phishing them and if this was a real approval. And so it's rapid on that end so that you can be efficient and rapid on your end as well. And then similarly with formal approvals, those are all done within 3 business days as well, and that's mostly held back by the valuation. The only thing that's different with a skip by LMG loan than a standard loan with a major lender is that we do split the loan, but those splits are, again, it's more like a split loan with a major than it is anything else. Both loans are at the same rate, the same tenor. And so economically for your customer, it's exactly the same as getting a single rate. It's more of an administrative split on the back end. And so, again, it allows them to operate with confidence, know that the economic deal that they're getting out of their mortgage is exactly the same as what they expect to if they did that same loan with a major lender.
Coming into our myth number 4. Now, this is an important one because I think that this is an area that brokers really need to understand how Skip does differ from the other lenders. And we have been touching on it through this episode. But in the market, brokers could be missing out on very big opportunities because maybe they do pigeonhole 98% lending for a certain type of target market. But myth number 4 is all about low deposit lending is only suitable for first home buyers or for those that have a limited deposit. Yeah. What do you say to that?
I think this is probably one of the myths that irks me the most, candidly. Like I think, and again, coming back to that point around empowerment and coming to and treating customers with respect and a lack of judgment, people find themselves in whatever circumstances they're in for a whole bunch of reasons. And I think a mortgage is a tool that allows people to achieve their objectives and their dreams and hopefully build the life they want for them and their families. And so we think about our product, and what we've observed probably is that our product is a much bigger tent product than even we expected. We didn't think it was a first home buyer product when we launched, but I think the use cases that we've seen from clients and from brokers has been much broader than even we could have expected. Again, if you think about a loan as a tool, it doesn't make sense that an 80% lend from a major bank is the right tool for every circumstance, even if you could get into that loan. And that's certainly what we've seen. So I'm happy to dive into some examples. If
Absolutely.
That's,
We would love to hear. And I think that really does help our listeners to understand the different circumstances in which they can look to help their clients. And I think having those stories is really powerful.
Yeah, absolutely. And so let's start with first home buyers, maybe, right?
Sure.
So absolutely, a number of first home buyers could benefit hugely from our product. I guess the government guarantee scheme is a very popular option for first home buyers, but prices have risen pretty drastically in a lot of markets. And now what we see is lots of clients want to get $5,000 over the cap, $50,000 over the cap, or maybe $100,000, $200,000 over those first home guarantee caps. Skip allows you to do that. Skip also allows you clients to purchase an investment property. It allows you to purchase an owner-occupied property, and if that client gets a great job offer 6 months later in an interstate or overseas, they can take it without being on the hook for LMI down the line, which that happens with the scheme. And so it's sort of a great option to provide flexibility at a really low cost to first home buyers anyway. The scheme's existed since we started, and all of our growth has occurred while the scheme's been around, and we think that it's a great alternative to share with clients because it does give them that flexibility and peace of mind, right? They can make the life decisions that they want down the track without needing to worry about, I'm going to get stung by LMI or whatever when they go. And probably the most important thing for those young Australians is that we don't need them to put all their money into the loan, right? So we don't have arbitrary rules about you can only
retain savings.
Exactly, right? Oh, you can keep 15 grand. Like, again, we empower customers to keep whatever they need and whatever they believe that they want in their house, and whether that's used for renovations, a safety net, an overseas trip, to fund their life move to London. We're not here to judge, and we're not here to make those determinations. And so we're very much a product for all people. That's one category about first home buyers. I think probably all the way on the other end is that we've been used as a tool, again, by really sophisticated investors. We had a young lady who was making close to $1 million in income working in finance, and she had 2 investment properties and she wanted to buy an owner-occupied property. And for her, a 98% loan was an absolute no-brainer. She could have got an 80% lend. She sort of looked at it and said, well, I'd prefer to keep my cash available for other investments. I don't want to sell down the investments that I have. Your rates are so low, I think I can invest my money better. And we said, and that works, right? And so that was a tool that she used. She bought a great property within 18 months. That property had gone up. She refinanced out at an 80% LVR. And, you know, it was a shrewd financial move for someone who had lots of options and understood the value that we could have as a tool for her, guided by her broker, of course. And that's a great outcome for her, a great outcome for us and her broker as well. And so, yeah, that was another success story. And again, right on the opposite end of that super sophisticated spectrum as well.
They are absolutely two extreme differences. And that's what we're talking about here today. It is not just thinking that this product is only suitable for one type of client. What about people that are rebuilding their lives through divorce? And obviously that is a situation where you are starting again, essentially. And I feel like this product could really help people that are now getting back on their feet.
Absolutely. Yeah. And I think again, it's one of those things that, you know, if you haven't been through that personally, it's actually quite difficult to understand how costly and devastating, candidly, it is for customers and clients who are going through that process or have been through that process and now looking ahead and saying, I want to rebuild my life. And so I think a lot of empathy, and certainly I've built a lot of empathy for clients in that circumstance, because I just didn't appreciate how costly that was for everyone involved, right? There's no winners in that circumstance. And so we've seen clients on both ends of the spectrum. We had one of our very first loans actually was to a newly forming family. So you had two parents with two teenage kids each. They wanted to buy a family home. They'd both been through divorces, making great money, like great, really strong incomes, but didn't have the capital bases as a result of those divorces that respectively been through to fund a proper deposit. They were able to buy way sooner. They were able to keep more money in their bank account. They built a pool. They were so thrilled. I mean, there are photos in our office of their pool that they built. They absolutely love our company because we allowed them and their family to do what they wanted 12, 18 months earlier and get the pool that they had been struggling to find. And so that's sort of one end of the spectrum. And then on the other end of the spectrum, our smallest loan was similar to someone who was coming out of divorce. She was a newly single mum, a teacher, and she had decided that she wanted to move back home to Perth from Sydney and rebuild her life there. And so she bought a small unit. She was able to service the loan just on her income, and the cash that she had was more than enough to fund the purchase with some buffer, which was important to her. As you can understand, starting in a new city with a young son that she needed to look after. And again, you know, super proud of, and candidly, like, you know, it has been one of the great joys of starting our business is to help people in those circumstances and play some small role in helping them, you know, move forward with their lives and build a future.
And it's so beautiful to hear those types of stories, because I think as brokers, we've all been around clients that have gone through so much in their life. And again, having a solution and being able to provide a solution and empathize and guide your customer through what could be the most devastating, hardest time. But you've shared with us so many different ways in which Skip has helped real life people in so many different circumstances, from, you know, sophisticated investors, first home buyers. And I know that this product would be great even for rent vesting, you know, kids that want to stay home with mum and dad. I mean, I don't want my boys to ever move out of my home and ideally, you know, but I want them to get into property. And I also love shares. And it's like, well, if you don't have to keep, you know, put all your money into it, borrow, leverage as much as you can. Like, there's so many ways that we can even educate. Like me, I'm educating my children about that. And again, having this tool is fundamental. I do love hearing about all the stories. I think that's what makes Skip also so important, and an important tool that brokers really do need to have. Now, Mario, I think today we've done a fabulous job in myth busting together. At Broker Bulletin, we are all about finding those 1% improvements that lead to big wins. Mario, what's one thing, you might have more, but what's one thing that you do every day that has the biggest impact on your performance?
It's a great question. Personally, for me, you know, my faith is at the heart of everything I do. And I think one of the big lessons that I've learnt from that is to only worry about things that you can control. There's a lot of noise in life, you know, whether it's, your kids or what's happening with your house, the roof is leaking or, the business is on fire or someone can't settle their home loan. And so I think the focus for me and the way that I deal with anything and that allows me to be as efficient as possible is to immediately assess what I can do about a circumstance, do that as well as I can, and then the rest is not up to me, candidly. And so, and then we move on. And so as long as I'm getting through everything that I need to and that I can control and the best that I can, then I think that's the only thing that keeps me performing, to be honest. Another really common customer is actually upgraders. So people who have a home and, have been diligent, bought their place and now are looking to upgrade. We've got a number of use cases in that scenario. One that pops to mind and is probably will forever be at the front of my mind is a young family, a couple had bought a smart apartment together. They just had their first child and they'd bought for $700,000. I think their apartment was maybe worth $800,000 now. So they'd made some money out of it. They'd bought with a low deposit loan, but they didn't have enough equity to jump into their next purchase. And so their bank had told them that the best they could get was a $1.1 million purchase. But their bank had been extremely slow, which was the only reason that they had decided to talk to us. They called me and applied for the same loan that the bank had offered them. And it was, we'd been chatting, and this was back in the day when I spoke to every single one of our customers, I should say. And so I remember many of them fondly. It was at the end of the call, the husband sort of said, hey, what if could we borrow any more? Like maybe is there a little bit more that you could give us? And I said, yeah, absolutely. You could actually purchase for up to as much as 1.3 million, up from the 1.1 that they had asked for. And he could not believe it. And he sort of said, look, I've been looking at this house, which is just a few streets down. It's advertised at 1.3. Can you actually approve me at 1.3? Because I will try and buy this house today. And I said, yep, absolutely. We actually got him the approval later that day, coming back to being very fast on our turnarounds. And they signed an exchange that weekend. We're happy homeowners soon after that. And then it was just such a great, example of our purchasing power, just stretching people, like giving people that ability to just stretch up a little bit without putting in more money, without, stretching themselves on the servicing side at all. They were very comfortable with their repayments, but allowing them to get closer to their dreams and their ambitions sooner, not paying stamp duty twice, not moving into a home that they're slightly unhappy with and that's going to irritate them for the next 2 to 3 years anyway. And so that was a really powerful example of purchasing power and not judging people on whether they're a first home buyer or an upgrade or a second home buyer or a third home buyer, and just giving them a great tool that allows them to do the right thing for them and their family. That's what Skip by LMG does.
Well, I love that. And I love our conversation today. I hope our listeners get a lot out of it. To wrap up, I just want to go over my key takeaways from today and really reinforce the message of Skip and how Skip by LMG can be front and center for our brokers. Skip gives borrowers purchasing power. It is allowing them to buy higher value properties based on their income, not on their deposit. Skip by LMG is helping far more people than just first home buyers. We've heard it here today. We've got sophisticated investors, families, couples, singles that are rebuilding their life. Could be after divorce or something that happens, a life event. We've got even upgraders.
Yeah.
We've got Australians with foreign spouses. There is so many opportunities there that our brokers can look beyond and help more people. Skip by LMG has been designed to get people into homes sooner without the usual red tape, cost restrictions as we've gone over. Brokers, I really hope that this episode has been of benefit to you. It's helped you understand what Skip by LMG is all about and gives you the confidence to start including Skip in your customer conversations as a pathway to their home ownership. That's it today. Thank you so much, Mario, for joining us, and to everyone at home, thanks so much for listening along. If you have a topic that you would like us to discuss, please email us at brokerbulletin@lmg.broker or DM us on Instagram at lmg.broker, and our producer will make sure we answer it as soon as possible. If you like this episode, please make sure you rate and follow us on your favorite pod store.
Thanks for tuning in to Broker Bulletin. We would hate for you to miss an episode. Subscribe to Broker Bulletin in your favourite podcast app. Has this episode been helpful? We'd love you to rate and review us. It'll help us deliver content that's useful to you and help others discover us. If you have great ideas for topics worth tackling or have burning questions you'd like addressed on an upcoming episode, reach out. Links in the show notes. See you next time.